Hello Pertti, thanks for inviting us into your offices here in London.
My pleasure.
Can you just give me an update on the strategy for Aberdeen?
Well, once we merged with Standard Life Investments and Aberdeen Asset Management about 16 months ago, with David Payne, who is my global co-head of real estate, we set up our new strategy. And we put quite aspirational targets for that. We set the longer term 2025 strategy, but also shorter term targets. So our key is really to diversify, globalize our business. We are very much UK, European centric at the moment, and we would like to expand our business. So it's really the growth and also diversification between the regions, i.e. US and Asia.
So there's been some quite substantial change. How's that been perceived by the market and clients?
Well, it's been a very positive feedback from the markets, and our clients and investors have been very supportive for the growth. They do see that our industry, as well as the wider asset management industry, needs to have a scale, and consolidation is part of that. For example, we launched a couple of new products, pan-European products, during the first 9 months of the merger. So, we were not really on the consultants or investors' watch list. They were keen to support our growth and really see that as a positive trend.
You mentioned trends there. What are the big trends that you're seeing that will influence the markets?
Well, we see clearly 3 key trends. First one is urbanization. Second one is ESG. And then, of course, e-commerce or technology. Those 3 are really the main trends what we see, and they are really truly global, and they will have a meaningful influence for the whole real estate industry. If we take a little bit examples, for example, urbanization, residential, PRS, people are moving into the cities, cities are growing, vertical growth and all that, so that's obvious. And also that will have an influence and a positive influence for the industrial and logistic assets and all that. So that's really the urbanization. Then if we go to the e-commerce and technology, that of course have an influence for the retail, what we have seen here in UK, especially that high street is suffering. So the strong shopping centers, strong locations, they will be very good for the future as well, or maybe not very good, but good for the future. But the secondary and maybe weaker places, they will suffer a lot. And then ESG. That's where we as an industry, we need to do much more, even that real estate industry has done quite a lot. But ESG is, I would say that it has started quite a lot, but we need to do much more to really embed that into our investment management processes and all that. It's obvious that ESG is very much regarded by the investors in the future.
And in terms of those trends, are they influencing your investment strategy?
Yes, in a way, obviously, yes. And if you think about those products we launched just recently, pan-European residential product. It's investing really in the residential, or should I say living, more widely from the daycare centers to the elderly care. And then we also did the IPO here in London Exchange, just behind the corner here, and we launched a pan-European logistic trust. So we have seen that investors are keen to that, to those sectors and those type of products, and we have then offered those kind of investment opportunities for them. And as you know, Richard, from the past, that we have a very strong footprint in Europe and also in UK, so that we can really be present and find those assets and then look after those assets locally. That's very important.
You mentioned the footprint in Europe, and of course you're also a global manager. What's your view in terms of the outlook for markets in general in Europe, but also within that global perspective?
Well, a lot of uncertainties at the moment. If you think about trade wars, and China, US the main one, then you think about economic slowdown. Then you also think about the political uncertainty we have in some locations, and then you also think about how long the positive, but the bull market has been in place. So this point in cycle, I think that everybody should be a little bit careful how they invest. So what do we see, and our forecast for the future is for the next few years is so that this year, 2019, 2020, maybe a little bit down, but then maybe a little bit more yield shift, and the yields are coming back again, and then at the end of the 5 years period, maybe the tide will turn again for the growth. So investors should focus on income, durable income, quality of income, and not bet that much into the high risk and value growth strategies.
Always a pleasure to hear your views, and thanks very much for sharing them with us today, Pertti.
Thank you very much, Richard. Pleasure to be here.